New data right now suggests that if you are a renter in Toronto looking for an apartment, you should be going bargain hunting right now. Yep. This is a headline that all investors, whether big or small, is actually afraid of. And this is happening even before the fact that the population starts shrinking in Canada. Yeah, big uh-oh. So, looking at this headline, it kind of terrifies me a little bit because there's a lot of condo and purpose-built apartment buildings coming for completion at a time when our population is about to shrink, the rents are already coming down, and vacancies are going up. That is a trifecta of disasters for anyone who owns condos and apartments. And all of these are going to spell catastrophic problems in the future. And when you have so much rental stock building up in an economy that's not going the right way, going south, call it, things aren't going to be getting better in the near future, call it 6 months to 1 year. And this is the data I want to share with you on this video. And whether you're a landlord or a tenant, you need to understand this data so you can adjust accordingly because the dynamics are changing and they'll probably continue changing in this direction. My name is Zen, and if you find this content helpful, make sure you do me a favor and like and subscribe. Let's start with the rental price. Looking at this chart over here, you can see that all the cities I've highlighted here in Ontario, which is like the yellow highlighted areas, have rents come down from last year. Yep, come down. With the noticeable big declines in Toronto, Oakville, and Brampton. And here's where it gets even scarier, right? These stats are from the latest quarter over here of rentals from the Toronto Real Estate Board. And you can see that apartments, which in this context from the Real Estate Board generally means condo apartments, right? So condos owned by mom and pop. The rents for every single type of bedroom is also down from last year at the same time. So essentially the rents peaked in 2023 in Q3 or like fall of 2023. And despite our real estate board trying to, spin this posting as an increase in the number of leased properties, which is up 29.2% from last year, you can see that the problem lies in this number, the number of properties listed. It's up 46.6%, meaning we have more rental stock coming on the market than there is demand. Yikes. And when I convert this into an absorption rate or sales to new listing ratio, third quarter of 2023 had an absorption rate of 68%, which is when rents peaked out in terms of average rent. And this year in Q3 2024, our absorption rate is 60%, down 8%, which is a very, very significant drop off. Remember, all of this is happening when we have our population declining. The economy is getting into a rougher shape where more and more people, I would say, are staying at home or kind of rooming together to reduce living costs because the economy is not great. Yep. So we're seeing a lot of this in like applicants that our team is screening for our clients on rental properties. You got 3 people trying to get into a 1+1. You got 5 people trying to get into a 3-bedroom, and they're not related, right? So that's just to show you. Now here's another problem we have. We have record high condo completions in 2024 so far. To date, we've had about 23,000 units completed and registered. And those numbers don't include the ones that have gone into occupancy, which is up 132% from last year, more than double. And even if last year was bad, call it, it's still up 67% from the 10-year average. This is why, despite the number of leased properties increasing from last year, it's not going up as fast as we're getting new rental listings coming to the market. So you have to keep this in mind. I would say most condo completions like in the last few years probably were bought like 70-80% by investors. And then they immediately hit the rental market the minute they get keys or firm occupancy because they have to start paying occupancy fees, right? So there's gonna be a lot of stuff coming online. Now here's the scariest chart of everything. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put 12 years of experience to work for you. Go to the link right here on screen. If you thought condo completions were high this year, look at 2025. It's going to be even higher. Yep. And this is what I've been saying. Despite the obvious amount of completion slowdown that's coming in 2028, as you can see in this chart, There's still a lot of poo-poo that the Toronto real estate condo market specifically has to deal with in the short to medium term because of all of these completions, right? Rates are coming down, which may help with investors' cash flow. But when you have this much inventory in the rental stock coming online, it's going to be a race toward the bottom for what the rental rate's actually going to be, right? Because inventory affects the market dynamics much, much faster than interest rates. And in a tower of condos, it's really hard to distinguish your unit that much more than the other 40 units with the same layout. So it really comes down to the price, and hence why I say it's a race to bottom for people who get keys on these condos. Now, let me throw a little bit more salt on the wound for rental spaces. And I've been talking specifically about condo apartments that are owned by, call it your, small mom and pop landlords, right? Maybe they own 1, maybe they own 5, maybe they own 10. But let's talk about the purpose-built rentals owned by big financial institutions. You're talking about like pension funds. See this chart over here? That hockey stick towards the top right? There is a lot of purpose-built apartments under construction right now that have the same target demographic that they're trying to rent to. And these are the same people that try to rent the condos that are completing for the mom and pop landlords. And when you look at Ontario as a whole, you can see that just a sheer amount of purpose-built rentals coming online make up an additional 5% of the total amount of existing apartment buildings currently right now. That's a lot. That's a lot. And this is why the vacancy rate is going up in that space as well. And while 2.7%, isn't a crazy high number, the backdrop of all this data I just shared with you looks like it's going to continue increasing, meaning it could get higher and higher. And if the rental demand doesn't pick up in the near future, that 5% increase in total stock could just become vacant properties because no one's renting them, which could bring us back to near COVID peaks for vacancy rates. Wow. Remember when nobody wanted to live in an apartment because of air circulating the virus? Well, that was at 6 to 8% vacancy rate. Well, we may get close to that depending on the economic conditions we'll see in 2025. And remember, during the pandemic, landlords were offering free rent to entice tenants to move. Guess what? The bigger landlords, right, like the pension funds or the ones that are properly managed, have just started doing this recently as well. Just have a look at these listings here. Free rent being offered right now. And I don't think this is going to be the last of these offerings, given that the fact the population is shrinking. There's a lot of purpose-built apartments coming online. There's a lot of condo completions coming online next year. And we're heading into a soft economy where people don't want to move out and spend extra money. And yep, that's the trifecta for how bad the rental market's going to be. So I really think the rental demand is likely staying low relative to the inventory that's coming online. And despite all of this data, the big pension funds are still investing $1.1 billion in apartment buildings in Toronto. And this is what I break down in this video over here. Why would the big pension money continue investing? There probably is a method to the madness. And this is exactly what I explained to you on this video. Chat then.